of Sentimas versus KPHDN. The appellant is a company that conducts a business of importing and dealing with reconditioned motor vehicles. They pay a runners to handles the matters pertaining to clearance procedures with custom and puspacom. On the 30th of October 2012, KPHDN visited Sentimas to check on their annual tax report, and they noticed that Sentimas claims express custom duty ECD as deductible expenses under Section 33 subsection 1 of the Income Tax Act 1967. Sentimas are not able to provide the receipt of payment to the runner as it is claimed that they pay in cash. Prior to that, they did not claim that the payment of the ECD as payment to runner during the question session with KPHDN during the visit. Thus, the case was brought to the court, and due to unsatisfaction with the decision which side to KPHDN, Sentimas make an appeal on the 20th of May 2016. These are the issue arises during second appeal. 1. Whether the RM2 542,000 million incurred in year of assessment 2009 as fees paid to runners to a job function that was to clear the cars from customs authority as expeditiously as possible to the end customers is incurred as outgoings and wholly and exclusively in the production of income under Section 33 subsection 1 Income Tax Act 1967. 2. Whether the penalty imposed under Section 113 subsection 2 Income Tax Act 1967 is correct in law. Now, we move to the SCIT order from a recent tax case. The main issue in this case revolved around deductibility of a payment labeled as express custom duty amounting to RM2,542,200 under Section 33 subsection 1 of the Income Tax Act 1967. This subsection requires that expenses must be wholly and exclusively incurred for the purpose of producing income to qualify for a deduction. The SCIT, by a majority decision, ruled that the payment did not meet this requirement. They found that it wasn't wholly or solely made for the purpose of producing income. As a result, the claim for the deduction was disallowed. In addition, the SCIT considered the penalty imposed by the respondent under Section 113, subsection 2 of the Income Tax Act 1967. They concluded that the penalty was fair, reasonable, and lawful. This affirmed the respondent's action in penalizing the appellant for non-compliance. Ultimately, the appeal was dismissed in its entirety by a majority decision. In summary, this case highlights two important points. Deductible expenses under Section 33 subsection 1 must strictly adhere to the condition of being wholly and exclusively incurred for income production. Penalties under Section 113 subsection 2 are enforceable when taxpayers fail to comply with the law. There are 3 points of view from Inland Revenue Board. First, lack of evidence including official customs receipts. Sentimas is unable to produce sufficient documentation. There was unclear documentation regarding the amount paid to runners or how these payments were used to pay customs duties. Next, legal basis for disallowed deduction under Section 33 subsection 1 of the Income Tax Act states that expenses must be incurred wholly and exclusively in the production of income to qualify as deductible. Without solid evidence, the Inland Revenue Board maintained that $2,542,000 does not meet the requirement. The Inland Revenue Board also said that the unverifiable or undocumented expenses cannot be considered legal for tax deduction purposes. Lastly, imposed a penalty under Section 113 subsection 2 Clause B of the Income Tax Act. The Inland Revenue Board imposed penalties for the submission of incorrect returns. This section allows penalties to be levied when a taxpayer files a return that is incorrect or incomplete due to negligence or intentional omission. The Inland Revenue Board stated that the absence of the proper documentation amounted to negligence on the part of Sentimas, justifying the penalty. Ultimately, the High Court upheld the SCIT's decision. They agreed that the RM 2.5 million could not be deducted under Section 33(1) because it was not wholly and exclusively for the production of income. The appellant's appeal was dismissed for introducing new issues during the trial and failing to provide evidence supporting claim regarding runners. SCIT's findings supported by facts, no evidence or receipt that payment were made to customs. Additionally, the penalty under Section 113(2) was deemed appropriate, given Sentimas' failure to comply with tax obligations. Secondly, burden of proof. Appellant failed to show the expenditure related to income production as under Section 33(1). The court also agreed with the SCIT's finding that no evidence in Sentimas' ledger indicated payments to the runners, and no receipts from customs were produced, as the payments were made in cash directly to the runners. Furthermore, Sentimas had failed to show that the amount was actually paid to customs or that the payment was an obligation for their business. As required under the Income Tax Act, taxpayers must provide clear and credible evidence to support their claims for tax deductions. Court implications are the legal consequences of a court's decision. Court decisions are often viewed as principled and impartial, and are respected even when they are unpopular. So, what are the key implications made by court on this case? First of all, when there is legal error, what it means is an appeal against the decision of the SCIT can only be set aside if the court is satisfied that A. the SCIT had erred in law, B. the decision of the SCIT is not consistent with their finding of facts, or C. there is no evidence to support the decision of the SCIT. Appeal can only be overturned if SCIT's decision is based on legal error, inconsistency, or no supporting evidence. Thirdly, new issues introduced during an appeal, which not part of the original trial, are unlikely to succeed. The court stated that it was unfair to allow Sentimas to introduce this new issue. The SCIT had made a clear finding based on the evidence at hand, which didn't include any mention of payments to runners. Fourth, credibility of witness. Runners cannot state the exact amount they were paid or how many cars were serviced, making their testimony unhelpful in proving the claim. Witness testimony must be detailed and credible. Circumstantial evidence isn't enough. The court upheld the SCIT's decision to disregard the runner's testimony, agreeing that it lacked of sufficient detail and was not credible. Lastly, failure to meet tax obligations such as proper documentation, evidence. Misleading claims can result in the rejection of claims and lead to penalties. The court found that the penalty imposed was reasonable, considering the appellant's failure to provide adequate evidence to support their claim and their attempt to mislead the authorities. Ultimately, the case of Sentimas versus KPHDN serves as an important reminder about the need for accurate, consistent, and well-documented claims under tax law. The court's decision highlights the importance of transparency and integrity when dealing with tax matters. Thank you for watching.